All right. Good morning, everyone. Jose J. Garcia, real estate investor, coach, and mentor here. So we got something special, a special call. Some of these calls, a lot more of these calls are going to be happening, and it's all bringing you value. That's what we're trying to do. We did this a few calls back where we brought you mobile home insurance agents. That's been a hit. That gentleman there is getting calls from everywhere. That is the point. We want to protect your assets. So, but on this call this morning, a little differently, something that I've been researching for a while. When I say a while, I mean me doing this for 7 years, you know, not something I stumbled upon yet until now. And I think it's going to be a solution for many of us, solution for a lot of investors that are getting into this field. So, we got from lending to exit strategies to how we invest. We can talk about all the topics, all the steps, but, when we're talking about when it's actual time to sell the properties, the mobile homes, personal property, we kind of staggered on that because there are no traditional banks. There are no lenders that jump on these kind of things. There's no security. And look, I'll stop it there. We're going to let this individual, this person, special guest that we have here, talk a little bit more about that. But by my side here this morning, I have a very special guest. He's a Keyhole founder and owner, lender, Mr. Sherman Arnowitz. Hope I said that right. Arnowitz.
Perfect.
There you go. Yes, sir. Good morning. How you doing?
I'm doing great, and thank you very much for that kind introduction, and thank you very much for bringing me into your world. I appreciate it. As you said, my name is Sherman Arnowitz, and I'm president and founder of Keyhole Financial Services, which we do a lot of stuff. Originally, 25 years ago, the idea of Keyhole Financial was we invested in non-performing, distressed second mortgages. And we would buy these distressed mortgages from banks at literally pennies on the dollar. And our goal was to work with the borrowers and keep them to try to keep them in their properties. If we paid on a $30,000 second mortgage, $3,000, there was enough room that we had the wherewithal that we could say, great, you can't afford $600. What can you afford? $200? Great. They didn't know that we paid $3,000 for the loan. So we've been very successful with that. We've continued that for over 25 years. And I'd say about 4 years ago, one of my investors, and we have about 600 investors in our database. One of our investors came to me and he owned 5 mobile home parks. And he proposed the idea that the investors that we have, these 600 investors in my database, who are prime investors for investing in second mortgages, could also be prime investors who are investing in mobile homes. His struggle as a mobile home owner was the cash flow of lending money to these borrowers, financing these borrowers, and tying up all the money. And so his premise was, wouldn't it be great if we could sell this amount that I'm financing to this mobile home to one of your investors and he could take over? And so we worked on the premise, and obviously there's a lot of financing companies out there that are financing. There are a lot larger financing companies, and they have a lot of strict, stringent rules and guidelines within them. And they also have that bureaucratic heaviness, weight, if you will, with them. So one of the things that we came up with is that we would finance the money to the borrowers, but in addition, we would have the park owner sign a personal guarantee to the lender. And it worked like this. Borrower comes into the park. He's interested in lot number 10. It's $50,000. He's got to go through the park application. Once he's approved, the park says, great. By the way, you need to put 10% down, and that goes to the park. Now for the financing, contact Keyhole Financing. They'll call us up. We explain the program to them. They go to and have to fill out our underwriter application. Once they're approved with the underwriter, which usually takes about 2 to 3 weeks, we're now ready to finance. And so we'll close the deal and the borrower signs a mobile home agreement with the lender. And then we turn to the park owner and say, here's your personal guarantee. You're guaranteeing to the lender that should the borrower ever default on the loan, you're going to make good on the balance of the loan.
Okay.
to the lender. Why would a park owner do this? Most people that I explain it to are baffled why a park owner would do this. The answer is most other financing companies out there, they're going to finance the borrower. And should the borrower default, they're going to go in and they're going to hold an auction. And the highest bidder is going to get that mobile home. And if the highest bidder is outside the park, they're going to send the truck in and they're going to move that mobile home out of the park. And the last thing a park owner wants to see with tears in his eyes is a mobile home leaving the park. That's
Yeah.
his asset. Now he's got to go and he's got to invest another 40, 50, $60,000. So by signing that personal guarantee, we're guaranteeing to the park owner that he will never lose an asset out of the park. What happens from the park owner's side is once the borrower defaults, in our agreement, we say, borrower, if you miss 2 consecutive months payments, you're in default. We alert the park. The park has 30 days to convince the borrower to make the payment so that we're even. If not, it now turns to the park owner and say, park owner, you either have to pay me whatever the balance is. If it was $40,000, you owe me $40,000. Or park owner, if the borrower was paying $500 a month to us, you can continue making those $500 a month payments to us. The park owner, he's going to evict the borrower. He's going to refurbish the unit and he gets to sell it all over again. That unit never leaves his house. So the park owner has a smile on his face because that unit never leaves and he refurbishes it for a couple thousand and he gets to sell the unit again. And we'll probably end up financing that unit for him. The lender is happy, even though he didn't make his full profit on the unit. He got his money back. Whatever was owed to him, he got his money back. So it's a win-win situation. And as much as we've given the borrower an opportunity and they weren't able to fulfill that opportunity or take advantage of it, the park owner is very happy and the lender's ecstatic also. So that's really the play that we've created. And when we've approached the parks, we haven't had one park owner say, I don't want to sign this personal guarantee. They know about it. They know the large companies aren't going to offer it. The 21st Mortgage, they're never going to offer that. The Triad, the Vanderbilts, they don't offer that.
No, that is huge there. And as I'm listening to you, I mean, you've answered a few questions I had already, but when we do these finances in house like what we have too, and it's obviously the lack of, now we have you, but it's always been the same thing is they don't have the full money and no banks or credit unions loan on these things. But when you're saying, technically the owner, the original owner or investor that has the mobile home, in this case being the park owner, that's even though you're thinking you're holding still responsibility somehow, you're also still keeping that availability to be able to get the mobile home back. And that's what we do now. When somebody defaults, obviously they have to be evicted. We go through that process, but we get the home back, we get the refurbish it, make it livable again, and we start over.
Right.
Not
Right.
something we want to count on, but when you're talking in the case of a park owner, absolutely. A park owner wants to fill in his park at 100%, not watch these mobile homes leave away. So that in a way gives them that opportunity, just get it back and do it over again. And like you mentioned, you get to loan them again. So it's not like it's an end of a deal, bad terms were done with you kind of thing. It's now you got a new buyer. And now for you, you got somebody new to lend to. So that's pretty awesome there. I know you're New York, right?
Correct.
New York. So are you lending across the board or special states only?
Right now, we're in about 20 states.
Okay.
We have it on our website. And one thing I did want to add, Jay, is that even mobile homes where the park owner doesn't own them, that it's a private deal, that the owner of the mobile home is moving, and they want to sell that mobile home privately, the park owner is still, in a lot of cases, signing the personal guarantee. So it's not even his that he's getting money for it. He just doesn't want that mobile home to leave us.
Security to keep it on the path.
Right.
Absolutely. I mean, that is an asset. If it's vacant, I mean, we'll leave it for another call for those of you joining. And we got quite a bit of people on Instagram. So thank you all for joining this morning. But yeah, I mean, it is a big expense, big troubles to fill in pads. I know because it's one of the services we do. So no, the last thing you want is a mobile home leaving. You know, you definitely don't want that. You said you're in 20 states at this time. So we cover Southeast, beautiful USA, all the states down north, South Carolina, Tennessee, Alabama, Florida, and of course, Georgia, where we're
Yes.
located.
Yep.
Texas is in our market for this year for sure. Any of those states of you're covering at this time?
So far, all of those states are.
Oh,
So,
there's going to be a lot of happy people on here on Instagram. So awesome. Absolutely. And we'll talk a little bit more on that. So you mentioned some of the ways that the lending works and how you operate, obviously. So is there a maximum that you can lend on?
we go as low, and one of the things being the new kids on the block, and we want to be known as a boutique finance company. We don't want to grow gigantically, like a Vanderbilt or a Triad or 21st. And so our specialty is our customer service. We're working with the borrowers, we're working with the park staff. As soon as we get a name, a borrower, we hold their hand and we know what they're going through and we know how intimidating it is. And so we'll go as low as $10,000 up to $150,000.
Okay.
We'll go pretty much any year mobile home. And part of the logic behind that is that we have an insurance policy, and that insurance policy is the park owner. So if the park owner is going to take a ride with us by signing that personal guarantee on a 1975 mobile home and it's worth $10,000, he
Mm,
knows what's at stake. So if he's willing to do it, he's our or there are insurance policies.
mhm.
And that's why we'll go as low as 10,000. And that's why we'll go basically any year. And so we also want to make sure that and what I've really learned is that the borrower has skin in the game. And that's why most parts, as you know, require some sort of down payment, whether it's 5%, 10, 15, 20%.
Mhm.
I've learned you really want to have the skin in the game. Right now, and correct me if I'm wrong, Jay, the industry standard of default is about 5%. Would you agree with that?
Well, we see higher numbers on our side, but we don't have the security that you have also. So you're
Okay.
teaching me something on here now.
Okay. So I have learned in the 4 years that I've been doing this that they do default. And as much as the park has their application and approval, and we have our underwriter and approval, it happens. But in the same token, somebody that's putting down 10% is going to try real hard to stay in that unit versus
Mhm.
we've had deals where they don't have to put down anything or the park is very lax. So that's one of the things that we've learned also. Other questions that I'm constantly asked is that, well, what's the minimum credit score?
Mhm.
And it's not a straight answer because the underwriting company that we work with, they take a wide approach. And so if they look at that and they go, well, this guy has a 550 credit score, which isn't great, but let's contact him and let's see if he can provide us with um, cable bills for the last 12 months, phone bill. Do you have a letter from your past landlord? So if the potential borrower is weak in one area, they'll try to beef him up by getting information in another area. And so obviously the goal is to get somebody, a financial candidate that is financially strong, that has a very good chance of living in that unit and making all of those payments. So it's really not a straight answer to say, well, the minimum is 550 because our underwriters look at everything. Certainly at the beginning of our underwriter application, there's 10 questions that the borrower looks at. And if they answer no to 4 of those questions, we tell them, stop right there. You need to contact the underwriter. and let's go over those 4 questions, because those are potentially, you're not going to pass because you answered no to those 4. So at least let's get that out of the way before you go ahead through the process and you have to pay for the underwriter fee.
Right. That was one of the questions was, because can anybody be qualified? So you do base it off also their credit, obviously the worthiness, like you mentioned, their score. And we see that a lot of people may not have credit yet. So it may be low, but it does not mean they have anything wrong with it. So we try to work with them. And it sounds like that's what you're trying to do, is you're trying to find a good in there somewhere to work with them. Skin in the game is definitely a real estate term that we use. And that's, if you don't have a down payment, that's usually the default way to happen. So the more you can get somebody to put a down payment, that also shows their worthiness, how much they want the home and how much they'll try to actually be homeowners. And I just say typical renters mentality. Let me just kind of cruise through it. So you're covering all the areas, definitely. What would be one thing that disqualifies somebody or a home?
Um, Legal troubles is definitely a disqualifier. We had a woman who passed with flying colors in Kansas. She was a very good tenant. Within 3 months, her son got released from prison, and she wanted him to be on the application as well, the park application, and they said absolutely not. That was a no negotiating. Sorry. He's able to visit under the guideline of you got to behave. But he in no way is going to be on the application as a resident in the park. And sadly, what happened, from what I understand, is he invited some of his friends over to celebrate his release. Things got out of hand. The sheriff was called, and so the park owner told me that he just told her, I'm sorry, but you can't stay in the park any longer." And so he ended up evicting the woman who passed with flying colors because of her inability to kind of see what was going on with her son. So I would answer probably that. Obviously, the other one is, as hard as the underwriters work to try to get these borrowers in there, and maybe it's a, hey, you don't qualify by yourself, but do you think you could add a family member or somebody else that we can add to it to kind of beef everything up? They look at all of these ratios, and if at the end of the day it's kind of like negative, negative, negative financially, there's nothing wrong with you personally, you're a really nice person, but yet financially we're looking at this and this is a disaster that's probably going to happen. We're in this virtual Vegas environment where we're taking a risk, and as dealers, so to speak, we want to make sure that the odds are in our favor, and the odds are in our favor that this person's going to be a good neighbor and is going to be financially solvent, that they're going to be able to make those payments without any problems.
Got it. Makes sense. Yeah. And a lot of this, it's like it's going back and forth. I mean, you're really in a way like a partner to a park owner. I mean, y'all are side by side. It is very transparent, very clear what's expected. And obviously, and that's the best way to make any business relationship work for sure. So you mentioned this in the beginning, the typical timing. So in a perfect world, if I were to come to you and say, I got a buyer, I have a home, let's go ahead and get the loan process started. What is the typical from start to when we actually per se receive a check or get that transaction going?
I would probably say 3 weeks. And the reason why it's 3 weeks, an average of 3 weeks, is because um, by law, and this I learned from the underwriter, once they're approved, they have 1 week by law to think it over. So even if they're approved, you can't put them in. If they're approved in 2 weeks, you can't put them in. They have to, it's kick the tires, think it over, so that they don't have any remorse. Time out, think about it for a week. So there's that week. I was just speaking with a park owner yesterday who owned 40 parks,
Wow.
and he said to me, that's a little bit too long, 3 weeks for me, because if somebody's at my door and they want to come in and they're approved, um, you know, and we came up with the idea, if it's really that important to you, why don't we quickly do a rent to own? And we can do that right away if that's what you want to do. And then as we're working on the financial portion, even if it's another 30 days or 45 days, we can then transition and convert that borrower from a rent to own over to a financing client. So he was very happy. We both came up with that solution, and he was happy with that solution. If somebody's knocking on your door and saying, I don't have time, I need to be in now. And so they're either going to go to a competitor, or maybe they're going another park, or maybe they're going to look at apartments and renting. But even that's the difference of night and day. You're renting versus you're owning something. Eventually, you're owning something that you have equity.
Yes, absolutely. Interesting. Okay. So 30 minutes went by fast. I mean, time goes by fast when you're having fun, and we continue to have more people join us on Instagram. So I know there's a lot of people that are interested. Me, myself, and I. We're going to be talking a lot more, Sherman. So we mentioned that every Tuesday at 7 p.m. EST time, we actually pitch deals. We are the only mobile home investing platform, and possibly real estate education platform, that offers our students deals. We offer real inventory to our investors so that they can go out and start investing. There are going to be an influx of calls coming to you after this call for sure. But could we get you to stop by a Tuesday, maybe this Tuesday coming up, call and just talk a little bit about on this for the investors live on the call at that time?
That's great. Just let me know where and when, and I'll definitely be there. I
Absolutely.
appreciate that.
Sherman, I got a couple questions post recording, so stay on here. But for those of you joining, okay, make sure you connect with us. Visit GarciaMHU.com. Instagram, thank you for joining us also. So everyone have a great day. Hang on 1 second, Sherman.
And you'll have my info on your website.